Hello everyone, welcome to today's webinar, Knowing Your Numbers. This is part 2 in our 2-part collective series that we're running covering the basics of all things numbers, data and finance. For those that I haven't met, my name is Giovanna Lever from Sparrowly Group and we're also joined by Avril on tech support. So here at Sparrowly Group, I manage the day-to-day finances and have built robust systems to ensure that I have a clear line of sight of how the business has performed and where we're heading. Especially this has been important in the recent months as we have all been affected by the lockdowns and the constant changes around COVID-19. Now, finance is a really big and important topic. And I know that a number of owners shy away from it or are just downright petrified by it, but it really doesn't need to be the case. So shortly, I'll take you through what you need to know as a business owner to get on top of your numbers and stay that way for business success. So some housekeeping before we begin. Your video and audio has been disabled for the presentation. The session will be recorded and a link of the video will be sent to all of those who have registered. This will also include the presentation slides and any other supporting documentation for this webinar. We welcome you to revisit the recording yourself and also share it with colleagues that you think may find it helpful so you can watch it on demand. Now, if you have any questions, please pop them in the Q&A box, which you can open at the bottom of your Zoom screen. We'll collate them all and then we'll go through these at the end of the webinar. If you're having any technical issues, please use the chat box and we'll respond to you directly. That's also at the bottom of the Zoom screen. So now that you can focus on the information to come, I'm going to turn off my video and so will Avril and then we'll pop back for Q&A. Okay, so time to break down today's webinar. Today we will cover what we think are the key aspects that business owners need to know. We'll be talking about why finance matters, in particular, knowing your numbers, business structure and accounting system, and why having a good support system can be beneficial to decision making. So let's get into it. Your numbers indicate how your business is going. Having a holistic view of your income and expenses will provide you clarity on when to make certain business decisions. For example, is there an opportunity to hire a new staff member, or can you take on a job at a discounted price to help a not-for-profit, for example? The best place to start is to know your break-even. So what's your break-even? It's basically our way of saying how much does it cost to keep the lights on and the wheels turning. The first step is to look at all your fixed costs. That is, the costs that don't change month to month. These are typically things like rent, wages, phone bills. Then you look at your variable costs. Now, these could be items such as repairs and maintenance, buying new assets, or even the office coffee and tea. The sum of these costs is the best indication of how much a business owner needs to invoice each period or bring in to ensure that they're not going backwards. Once you've determined your break even, this gives you the opportunity to add your margin, and essentially this is our word for the cream on top. Knowing your break even allows you to price your services correctly, ensuring you remain competitive, and above all, figure out what you get to take home. Now, profit and loss and cash flow. Now, COVID has highlighted the importance of knowing your business cash flow, allowing you to predict when money is coming in and when money is going out to ensure you remain cash positive. Sometimes being honest with suppliers about a small delay in payment or just making a part payment goes a long way, but I can't stress enough here, out of respect and ethics, it's really important that you communicate with your suppliers around that. Don't make the assumption that they're going to be okay with a part payment. Most accounting systems will allow you to produce a cash profit and loss. This means it will track your income and expenses based on what you have typically received and paid. If you look at the profit and loss on your screen here, we would typically be looking at 3 main items: total income, total operating expenses, and net profit. In our example, the net profit is negative, as you can see the brackets around the number at the bottom of the 25,090, which means in this particular quarter, the business has spent more than it received. essentially net loss. This report also shows that the revenue received was not enough to meet the business fixed costs, so wages and rent, for example. So as a business owner, this may lead you to either tap into your personal savings to fund the business, use existing cash reserves that are within your business, and review expenses and consider if there were any abnormal costs this period. For example, payment of an employee performance bonus. Looking at the debtors report, we also recommend, so that you're not dipping into your savings, looking at your customer trends in paying your invoices. So if you have 30-day terms, but you know your customer only pays after a couple of reminders, this means you need to take this into consideration when paying bills. The best report to look at for this is your debtors, is the age receivables report, which is what we have here on the screen. If debtors, also known as receivables, are not in the current 1 month column, like less than 1 month column, we'd recommend following up with your customer for payment of expected payment date. Your first step may be to simply email with a statement of outstanding invoices. And if you do not hear back, follow up with a call and then take it from there. I mean, ideally, we want to make sure that your debtors are paying you in a timely fashion. So looking at profit and loss versus budget. Finally, looking at your numbers frequently will allow you to, number one, compare your actual results with your forecasts. So allowing you to access if you can get a better deal for your dollar when it comes to things like phone plans, insurance, electricity. We spoke in the last webinar a couple of weeks ago that Ben presented about using data to both look at the past and looking forward by modelling and forecasting. So if you've missed the first session of this webinar, I will make sure that in the follow-up email, we'll send a link to that so you can watch it. It's really important. And number two, make an assessment on what you can do differently next time. See if there were any missed revenue opportunities. An example of this is when you don't have enough staff to pitch or tender for new work, or to go out on a sales missions, for instance. If this is happening on multiple occasions, sometimes investing in additional staff, although initially it may be difficult from a cash flow perspective, it will pay dividends in the long run. Most accounting systems will allow you to include a budget so you can compare your actual results to what you forecasted at an earlier point in time. So as you can see in our example here, this company has had major variances compared to their initial forecasts. So when running a business, it's important to understand why and what has caused the variance. For example, based on this slide, some of the questions we would typically look at and ask would be, is the reduction in revenue a result of invoices being completed a couple of days after month end? Therefore, income next quarter will be higher. Or do we need to review the office expenses budget, as this was more than double what we had anticipated? Or why have wages not gone through this month? Simple reviews like this will assist businesses in having a better understanding of their business. Finally, a word on the ATO, the Australian Tax Office. Now, as scary as they may seem, they are here to help small businesses. During the current COVID pandemic, the ATO is assisting small businesses by offering payment deferrals for certain tax debts. So if you need a little bit more time to pay the ATO, it's best to contact the tax agent, your tax agent, to discuss your options. Burying your head in the sand and trying to avoid the ATO is no way to run your business. Now we know that every business isn't the same, so that what works for one business may not be ideal for another. Businesses can be set up in a variety of structures, each having their own pros and cons. Typical structures are companies, partnerships, and sole traders. The simplest structure is sole trader, which means you run your business under your own name, you pay tax in your own name, you take on all liability personally, there is little opportunity to be tax efficient once you make more than $180,000. The $180,000 is known as the top margin tax rate threshold. A company, compared to a sole trader, offers reduced liability and can offer greater tax efficiency. So when you're a company, there is not the risk put on your personal finances. So you should be structuring your business to align with your objectives and needs. So for example, you may want to have the most tax effective structure, even though it may cost you more to administer at year end. On the other hand, others' objectives may be to have the most simple structure in order to minimize the cost of their tax affairs. All right, now for the 3 letters that keep all accountants busy, GST. Not every business is required to register for GST. You're only required to register for GST if your current or projected GST turnover, so that's gross sales less GST, is more than 25,000. If your turnover is under 75,000, then in most cases, the choice is yours. But just to be aware, if you don't register for GST, then you don't charge GST on your sales, but it also means that you can't claim back the GST that you've paid to your suppliers on your expense lines. So I would highly recommend you talk to your tax agent in respect of your structures and your GST obligation. Whether you use a shoebox for your receipts, I don't recommend that, but some people do that still. An Excel spreadsheet, definitely the best basic way to capture expenses, or an accounting program. Getting your systems in place will save you time at the end of the quarter, end of financial year, and tax time. But it doesn't need to be scary. Most businesses start with a basic reporting format, which means typically an Excel spreadsheet summarizing your income and costs. And from a personal perspective, that's how I started my business 6 years ago, using Excel spreadsheet. We now use Xero as our accounting system. When you do make the decision to move to an online accounting system, a few things that we recommend are: number 1, choose an accounting system that you're comfortable with. We love Xero, but you may not. Most accountants, for instance, have experience across all systems, but you need to pick one that is right for you. Second point I'd like to make here is when transitioning into the new system, you should pick a clean date. What this means is don't transfer your data mid-month like the 18th. Rather, set it at the end of the month or the financial year. Once you've made the choice, get to know your accounting software, especially if you're doing most of the bookkeeping yourself. Knowing the basics can go a long way to ensure you're able to obtain and extract the numbers that are important to you. I just can't stress enough that you should not be afraid to ask for help. Asking questions along the way makes your accountant's life a lot easier, it makes your life less stressful, and makes sure that there's no silly mistakes that happen. Sometimes the best time spent are on the online free courses that your software provides. It's just a great way to learn the basics. So I manage the bookkeeping day to day and the financial affairs within Sparrowly Group. So I'm in Xero every other day, but sometimes I'm not sure how to treat a transaction, for instance. So I have no problem asking my accountant, but I'm also jumping on the free tutorials as well. I'm always learning because things are always changing. So now finally, let's talk about giving your business a financial health check. We suggest to always look for efficiencies. Your accounting software is a really great place to start. So Xero, for example, on a monthly basis introduces new functions such as cash flow or business analytics like debtor days. Have the right support. It's important to have a good and trustworthy accountant that gives you the financial support when and if you need it. While helping you with your reporting obligations, your accountant can give useful insight on how and what you could do in order to achieve your goals. And it's really important that you know your break even. So that concludes our look into knowing your numbers, part 2. A quick recap on what we've covered off today. You've got to know your numbers, especially your break even. Always look for efficiencies. Your accounting software or your Excel spreadsheet is a good place to start. Make your system work for you. Have the right support. A good and trustworthy accountant gives you the financial support when and if you need. And I can talk a bit later if you've got any questions around choosing an accountant. They help you with, your reporting obligations, and gives you really useful insights on how and what you need to do in order to achieve your goals and make sure that your financial affairs are squeaky clean. Know your accounting system. It's there to work for you. There's plenty of online tools and resources. And if that's not the way you learn, ask. And there's plenty of people to ask, and you certainly can come to us if you need any help around Xero, because that's what we use and we're very familiar with it. And finally, again, you got to know your numbers. If you don't know your numbers, you don't know if your business is successful. All right, tomorrow you're going to receive an email from us with the recording of this webinar, presentation slides, and other links you might find useful. Please feel free to share this email with other colleagues or businesses that you think might find it helpful. Let's get to questions. We're going to pop our videos back on for the panel and answer the questions. Avril, what have we got? And I'll just put my video back on.
Thanks, Giovanna. That was a great presentation. So the first question we have is, what do I need to look for when hiring a bookkeeper and working with an accountant? Okay,
really great question. First of all, I want to make the distinction between bookkeeper and accountant. In some instances, bookkeepers can be chartered accountants and they have that experience. They may have decided to start a small business focusing on bookkeeping, but typically you don't need to have qualifications to be a bookkeeper. So you really need to understand that there's a difference. I'm the bookkeeper for Sparrowly Group, but I'm not an accountant, right? So I manage all of the day-to-day. But with an accountant, and this is where the distinction is really important, your accountant is up to date on all the tax legislation and the constant changes when it comes to taxation, taxation law, managing your business, especially during COVID with all the grants and the treatment of JobKeeper. And if any of you are now on the next round of JobKeeper, the way in which you report JobKeeper now is different to how you reported it in the first and second rounds. So JobKeeper 3.0 and I think 4.0 is different again. So that's where your accountant keeps up to date, and it is their responsibility to do that. And particularly also thinking about, those of you in New South Wales, we just had a budget release in the last day or so. Your accountant, as opposed to your bookkeeper, will be on top of that, and that is an expectation. But I think you need to just understand that when you bring in a bookkeeper, they aren't across the level of detail that an accountant is, but they both have a really, really important role to play.
Great, that's great, thank you. I guess another point, just riffing off that, is you don't necessarily need to pick the first accountant that you speak to, right? It's an interview process and you need to find someone who you feel comfortable to work with.
Yeah, that's a great point, Avril. And we'll also add a link to an article that on our blog around how to choose an accountant. So we'll add that in terms of the resources tomorrow as well.
Great. Okay, second question. If I'm looking to exit my business, either through selling or retiring, what do I need to do and what kind of reports should I prepare?
Okay, this is an interesting question. All the reports that we went through in this webinar are absolutely integral to make sure that they are up to date, and for getting ready to exit or sell your business. But at the end of the day, they should be up to date anyway as part of keeping a healthy business. So when you're looking at evaluation of business, this is where you should speak with your accountant to get some advice. Now, there's different tools and methodologies to work out how much your business is valued. So, for example, I was on a webinar with a big data tech company. The founder was Keynote, and someone asked this question. This is a course I'm doing through the Australian Institute of Company Directors around how did she value her business. And apparently tech is, you work out how much you're earning and then how much your revenue is, and then you times it by 10 to get the valuation. I'm like, oh, that sounds pretty crude. But so there's different ways. You just can't make this stuff up. You really need to work with your accountant around evaluation. If you do go to your accountant, there may sometimes, I guess one consideration is that there may be a conflict in terms of the level of objectivity that your accountant might give versus another accountant. It's a bit like when you go to the bank to get your house valued, always going to be conservative, versus going to a real estate agent. But I certainly would recommend that you talk to your chartered accountant, your tax agent first. And then certainly there's no harm in getting a second opinion if you feel like you'd like to get another opinion with another reputable accountant.
Perfect. Okay, our third question is, and you sort of touched on it, but I think if we just recap, where should I start if I want to give my business a financial health check?
Okay, always you're going to start with your expenses. Okay, so that's your absolute North Star here. Unless you know how much it's going to cost to keep your lights on, you're going to be in the dark. Okay, setting a budget is absolutely integral. Even if you're a new business, it's really important that you set your budget. So in some instances, with some businesses, it's difficult to predict. So just in terms of complete transparency, from a Sparrowly Group perspective, because we tend to work on project basis because we're a consultancy, it's difficult to forecast because we don't have a crystal ball to tell us what work we're going to win and what have you. But we do have historical data, so we can make educated guesses. So we know Q3, which is January to March next year, always quite quiet. It's always a little bit stressful. And then the last quarter of the financial year tends to get quite busy with particular clients, industry sectors that we work in, because it's close to end of financial year. But you should always start with your expenses first and you go from there. And that helps you understand what you need to make, essentially your break even, which we talked about earlier. Thinking about Ben's session a couple of weeks ago, just making sure, again, like I mentioned, we're going to share the link again so you can grab everything. But, we included tools there in terms of setting your budgets and what have you. So I know a lot of people listening are really scared with numbers. They don't know how to use Excel or Google Sheets. So in that last session, we actually created some sheets, some working sheets for you, formulas, etc. But you should also listen to the webinar. I think that's really important. But if you don't use Google Sheets and you use Excel, there are actually about 1,000 different templates in Excel that you can download. And there's plenty around there around budget tracking. I was just, and I only learned that last week, would you believe? Because we use Google Sheets, but I was doing some LinkedIn learning on data and Excel because I thought, you never stop learning. And I'm like, oh, holy dooly, there's many templates here that are really easy to use. They're fantastic. So go in there, and then you can also, Google like Excel learning, templates or data forecasting, for instance. That's the beauty of the internet. But what's really important is that you don't set and forget. So we use the rolling forecast method here at Sparrowly Group, and I recommend a lot of that small businesses should do this. So what that essentially means is that we're constantly reviewing our budget against the actuals. Every quarter, once the BAS is finalised, we pull down those actuals and we update the budget. So then we're looking at past performance actuals in that financial year, forward projections in the budget.
Great. Yeah, that's a really good point. Okay, only two more. So I'm a new business with no historical data. How do I go about setting a budget? Okay,
we totally get that. It's essentially the same pattern as I just went through before. So regardless of whether you have historical data or none, you have to start with your expenses. And you shouldn't be going into business if you haven't done your expenses, okay? Because you can't set your pricing and what have you. So you need to understand what it's going to cost you. And, like I said, regardless, you should be able to do that. You should have already worked out, as part of that, you should have already worked out your pricing schedule for your product and service. So because you would have looked at, what the market demand is, what your competitors are doing, etc. That helps you set the potential revenue line and helps you understand, like say if you're a touring product, for instance, and you understand what your expenses are, then you need to, and you've worked out some price points that'll help you work out what your capacity or what number, what packs you need to have. How many tours do you need to deliver in that year to break even? It also helps you pressure test your price point as well.
Great. Great points. Okay, final question. Actually, I think we've sort of addressed this. How should I forecast and at what frequency should I look out for reviewing?
Oh, okay. No worries. No, I'm happy to go through that. So as a small business, I think you should be doing it weekly. And hand on heart, I do it weekly. I'm constantly reviewing our expenses on a weekly level. I'm also reviewing our revenue lines as well. I'm making sure that invoices don't lapse, and if they lapse by a day, I'm onto it. You know, and it's as simple as resending the invoice via Xero, but I changed the subject line: overdue, dear blah blah. This invoice was due, da, 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 and that normally is enough. I haven't, you know, fortunately, because of the way, and I'm probably a bit anal when it comes to money management, I haven't had to send any, you know, nasty letters or anything like that. But I did have a client who decided that it would be okay to part pay me a couple of years ago, and that's not okay unless they've asked for my permission to do so. I kind of figure if they don't have the money to pay you, then why do they hire you in the first place, right? So I've always been really clear with setting out the terms of engagement and also the terms of payment, etc. But so that's really important. Always review weekly, okay? You can't just set and forget. And so with that, we have an ops meeting every Friday where we look at the budget, and you know we've downloaded you know quarter 1 actuals from after we did our BAS, so that's now in the budget when we're looking at it, this whole rolling forecast methodology. So we have an ops meeting every Friday. We look at, you know, what new business has gone into the pipeline. We're a professional services business, so a little bit different to, you know, whether you're a touring business or you're a cafe owner, etc. But so we have to pitch for work. So when we pitch for work and we put that into our forecast, we don't expect that we're going to win everything. Love to win everything, but that doesn't happen. So we have created a probability matrix based on the likelihood of us winning, and that helps us understand, you know, what bacon has come in, you know, what money's come in, what is the potential. So, you know, bacon with a side of eggs, I guess you could call it. And it helps us work out what money is coming in. But I'm also reviewing on a weekly basis the expenses, and I'm constantly reconciling the expenses in Xero. Don't let that get on top of you, because then you go, oh my God, I've got 200 expenses to reconcile. So it helps me keep on top of it, because it also helps me make decisions like, you know, if we are going through a busy period, if I need to bring in additional staff members for a bit, or put current staff members on additional days or hours, etc., helps me be able to make very quick business decisions. We then have a monthly deep dive into the financials, and then every quarter, and this is something that I insisted on with our accountant. Apparently we were their first business to insist on this, and they have like some pretty big clients, and we're small fry in the whole scheme of things. We have a quarterly management meeting with our accountant. So we close off BAS, we do the superannuation, you know, I prepay tax with Sparrowly Group, and we use a percentage method because I don't want to be hit with a tax bill at the end of the year. So prepay. So if you have a couple of bad quarters, then, you know, sometimes you get a bit of tax back. So that's really good too. But we sit down and we also then do the tax planning, constantly reviewing the tax planning to make sure that, you know, we've addressed all of the elements, and there's no surprises then when we're doing our tax returns for the business, and then also our personal tax returns at the end of the year. And it just helps us to manage our money better, and you know, just so that we can control costs. Like the first year I did it, I just was paying them like a small retainer, and then we would pay them on an ad hoc basis, and that was a bit loose. And so then we agreed to just pay a retainer, and we're very clear in terms of what that includes. So I think it's really, really worth it. And look, I've got a strong background when it comes to accounting and finance. But I don't profess to know everything. And I just want to make sure that we're doing, you know, the absolute right thing. We're squeaky clean, everyone gets paid, because it's good for your business, you know, in terms of performance, but it's also good ethical business as well. I think I've gone on a little bit of a rant, Avril, on that one.
Oh, look, all relevant information. So, yeah, I think getting the insights helps in terms of how other people do things and how, you know, potential businesses could manage things. So that's it. That's all our questions. So I'll hand it to finish it up.
Fantastic. All right, so up on the screen there are my contact details. Please feel free to get in touch anytime. And please note there, we've got our next webinar, which is Distribution 101 on Wednesday, the 2nd of December at 11:30. So if you are a tourism business and you're online, this one's for you guys specifically. So I can't stress enough the importance of watching this one, so you can better understand how distribution works, what it is, why you need to do it, and also how you need to factor this in as from a financial perspective. But like I said, my contact details are there. Feel free to reach out anytime, no strings attached. Got a question, and you know, and if you needed, you know, some recommendations for accountants, again, reach out and be happy to give you a couple of recommendations. But you, of course, you need to vet them yourself and make sure that they are right for you and your business. But thank you so much. You'll receive an email tomorrow from us with all the bits and bobs. Feel free to share it and let others know about this webinar series. And thank you. I know how busy you are as small business owners, so really appreciate your time. Thanks so much.